Hello friends, good morning to all of you. And there are some standards when we are dealing with the accounts, right? It's not like it's being done in one company. It's being done in different companies. It's being done, let's say, over the different industries. If we talk about the global factor, right? One company is there in India and the other company is there in USA. We have to basically we can be making inferences about these two companies also. So how it can be done? It can only be done if some standards are being set up, if those standards are being dealt with, and if those standards are being followed, right? So we are going to talk about the accounting standards in India and what is their definition, what is their scope, right? So whatsoever the accounting standards which are being followed in India, those are issued by the ICAI, that is the Institute of Chartered Accountants of India. And basically ASB was constituted by the ICAI, that was being constituted in 1977, and the main function of ASB is related to so as to formulate the accounting standards. So standards are being issued by ICAI and it set up the accounting standard board, and accounting standard board formulates the accounting standards, and so that the ICAI can mandatorily be issuing those standards. That's the scenario, right? So under the section 129 subsection 5 of the Companies Act, the financial statements where they do not comply with the accounting standards, if there is any deviation, we need to write the reason that why deviation was there and what is the financial effect of that particular deviation. That is to be told, that is to be done. And accounting standard, very important point, accounting standards are mandatory. Where the accounting standards are mandatory? Where the company is listed on stock exchange. So if the company is listed on the recognized stock exchange in India, and let's say case those are issuing the debt or equity securities, or they are in a scenario that they are going to issue the securities, right? In both the scenarios, they are to basically mandatorily be following the accounting standards. That can only be done if they are following the accounting standards. So that is mandatory for them, right? It's not like an option. It is a mandatory thing which is to be done. And whatsoever the commercial, industrial and business reporting enterprises whose turnover is 50 crore rupees, more than 50 crore rupees, those are also to follow the accounting standards, right? So accounting standards must be followed in that scenario also. Is that clear? Kindly please confirm. Is that clear? Now, let's move further. It's about the accounting standards. Now, here we are having a list of the accounting standards, although there are a lot of accounting standards, but I'm just going to tell you a few out of it. So, accounting standards, one is related to the disclosure of the accounting principles, valuation of inventories. Now, whatsoever I have highlighted in the red ink, those are important to learn because those can be asked in the exam that this accounting standard is related to what. So, if you're unable to cram, just leave this part. If you're unable to memorize these things, just leave this particular part. You can be having an idea. Just give me a brief idea related to it, that accounting standard 10 is related to the fixed assets. It is related to the fixed assets, and accounting standard 6 was also there, but now it is deprecated, right? It is deprecated, and further the depreciation is there and it is now withdrawn, and such matters are now related to depreciation are being taken care of under the accounting standard 10. We can simply be saying that accounting standard 6 does not exist much longer now, and it is taken care of under the accounting standard 10. Clear? Right? Further, it's related to the GAAP. Now, what is GAAP? This is generally accepted accounting principles. GAAP is related to the generally accepted accounting principles, right? Now, how these GAAP, how come this GAAP is going to matter? So these are the basic accounting principles. First of all, when we are talking about the GAAP, these are the basic principles, right? They will be providing us with the framework. They will be telling us the accounting rules, standards, which will be industry specific. So whensoever we are talking about the GAAP, we are talking about the basic accounting principles. We are talking about the industry specific accounting practices, right? And India, as I told you, the basis of accounting standards are being constituted by whom? By ICAI. As I told you, ICAI set up the ASB, ASB tells the standards and inform it to ICAI, and ICAI mandate those standards, right? So the basic accounting principles may not be the direct part of the accounting standard. It's not the case that whatsoever the generally accepted accounting principles are there, that those are going to be direct part of the ICAI standards. It's not the case, but these are the related laws, and these are assumed and expected universally, right? That universally these are to be followed. That universally whatsoever the standards generally accepted principles are there, those are to be followed. That is the GAAP. Is that clear? Is this clear so far? Kindly confirm. Right now, what are the main objectives? What are the main objectives? First of all, that whensoever we are to provide the information must be useful. Whatsoever the information that is to be provided, the information must be useful to the investors, to the creators, to the users. Means whatsoever the persons who are going to consume that particular information, that information must be useful to them. That must be logical. Whatsoever the information we are going to provide related to investment, related to credit, related to financial decisions, that must be logical, that must be rational, and that information must be helping the users or potential investors, that they can be assessing the things about the company, they can be having the perspectives about the company, they can be looking into the things, that what amount is being received, then what amount is being paid, what is the cash inflow, what is the cash outflow. They can be looking into the things if the standards are being followed only, right? So that's the case. Is that clear? Now let's learn about the basic things or basic principles which are being covered under the GAAP. First one concept, it's related to the business entity concept. Now, as per the GAAP business entity concept, the business and the owner, those must be considered separately. Like even if we consider a proprietorship firm, right? Let's say we are having a proprietorship firm A, and the owner is person A. So we have to take care of the fact over here that whatsoever the amount being is basically given as an investment by the proprietor or by the owner to the company, that's a liability to the company. That's a liability to the company, right? Because the business is having a liability, that money is to be returned back to the owner, right? And whenever there is a loss, that will be recorded on the asset side, right? So this is the business entity assumption. This is about the business entity assumption, first of all. Clear? Now the second one, it's related to the monetary unit assumption. It's about the monetary unit assumption. Now what do you mean by monetary unit assumption? That whatsoever the financial transactions are being there, which can be expressed in the monetary format, right? All the financial transactions must be represented in a monetary format. Only those transactions are to be reported, and none other transaction is to be reported. Is that clear? It means only those transactions are to be recorded which can be there in the money format. If it cannot be in the money format, it should not be recorded. Let's say case the health of the proprietor. Now definitely it is very much important for the company to work, but it should not be recorded because it cannot be in the money format, right? The further concept, it's related to the accounting period concept. Accounting period concept. It means the accounting process must be completed in a given certain period of time, which could be usually a calendar year or a financial year. And every single transaction which is related to that particular accounting period, that must be the part of the financial statements prepared for that particular period only. Let's take the case that you paid the rent in advance for the next 12 months, right? You paid the advance in you paid the rent in advance for the 12 months, but the rent for the month of January, February and the March will be for the current financial year, and for from the April toward the December, for the 9 months, it should be covered in the next 9 months or the next financial year it is to be covered, right? So we'll be considering the 9 month rent which you have paid in advance as a prepaid expense, right? And that will be presented as a asset, right? Whereas the amount for this financial year, for the 3 months, that is January, February, March, it will be considered as an expense. Is that clear? So that's about the accounting period principle. And further, it's about the historical cost concept. Now, when we're talking about the historical cost concept, what does it indicate? That whatsoever the assets are there, those are to be recorded at the cost price, at the cost at which you have acquired the asset particularly, not the current market value, that is to be considered. Is that clear? That is very much required, and that's the concept related to it. Further, the concept is a going concern assumption, that whenever a company is being set up, it is being set up for a longer duration. For a longer duration it is set up, and it is not set up for a short duration. Clear? Whenever we are going to set up a company, the company is set up for a longer duration. It is not set up for the short duration purpose over there. That is a going concern, because if we'll be considering that the business is going to liquidate in the near future, indefinitely we need to restate the assets and liability at the current price and not at the cost price. If we are going to assume that the business is going to liquidate, right, in that scenario we cannot be costing, we cannot be basically we cannot be restating the prices at the cost price. We have to restate them at the current price, right? And that is a point of assumption that the business is a going concern and it is going to operate for indefinite amount of time, right? Further, after that, it's related to the full disclosure principle. Now, full disclosure principle says what? That if even you basically do represent the accounting entry, let's say you have recorded the accounting entries. Now, that particular accounting entry individually does not represent the whole picture to you. You need to provide the relevant information toward it. You must be looking at the different narration. Even when you post entries in the bank, right? Credit entries, debit entry you post, you do give a narration to it, that what it is all about. So that is basically the full disclosure. So even about the transactional level, even in the balance sheet or financial statements, you are to provide the complete information, relevant information toward it, right? So at the transaction level, it can be given by giving adequate narration toward it. And at the financial statement level, you provide the notes to that particular account. Then it's related to the matching concept. Now, let's take the case that you have earned a revenue in the year 2025, December, right? Then you should be presenting that revenue in that particular financial year only. That should be corresponding to that particular financial year only. Same way, if you have expended some amount, let's say in January or let's say in the month of March, that amount must be showcasing in the that particular financial year statements only, not in some other financial statements, so as to show a true profit picture. Is that clear? Further, it's related to the accrual basis of accounting. Accrual basis of accounting says that whatsoever the revenues are there, whatsoever the expenditures are there, those are to be recorded in the periods where actually they have incurred, not related to when you have received or paid or spent the cash or cash equivalent. It's not related to that. Let's say the case that you earned let's say case the interest was due on 31 March, that the interest was due on 31st of March 2025, but you actually received the amount by 30th of April, right? You received the cash by 30th of April, but the due date when it was to be due, it was in 31st March 2025. So you should be considering that particular amount in the month, in the year corresponding to 31st March, in the financial year 24-25 only, and not related to 25-26. Is that clear? So that's about the accrual basis of accounting. Let me just give you one more simple example related to it. Let's say the case that the loan was there and it was amounting rupees 10 crore. 10 crore loan was there, and the installment went due on 25th of March, right? The installment was due on 25th of March. Now, the interest was accrued. The principal amount which was basically due now by 25th of March is now not being paid by 31st of March. Now, that particular date is considering toward the financial year 24-25, financial year 24-25, right? From 1st of April 24 to 31st of March 25, right? So it should be considered in this particular accounting period only, not related to some other accounting period when you are actually going to receive the amount. Same goes for the expenses. So if one expenditure was related to the previous financial year, it should be considered in the previous financial year only, not related to the date when you have actually paid the cash or cash equivalent, right? So that is accrual basis of accounting. Further, it's related to the consistency principle. Now, what is consistency principle? Consistency principle is very simple, that you should be consistently be using the same laws, bylaws, procedures, processes which you were using, and you should be doing it for the series of transactions. Like for one particular month, I'm using written down value method of depreciation. For the other month, I cannot be using the double declining method of depreciation or sum of years digit method of depreciation. I cannot be doing that. I should be consistently be following the accounting procedures so that I can be having a meaningful comparison. This is very much required. Further, it's the materiality principle. Now, materiality principle says I'm to record the, let's say, let me just give an example. I'm to record the particular, let's say, depreciation on the fixed assets, right? Whatsoever the fixed assets are there, I'm to record the depreciation on it. Now, consider that I'm having a wall clock which is amounting rupees 300. It is amounting rupees 300, and that's the case useful life is for the next 5 years, right? Or let's say I'm having a punching machine or stapler which is amounting rupees 40, and it is going to last for the next 4 years. Now, this is also a fixed asset. Am I to calculate the depreciation on these assets also, and to record these particular assets in the assets account? No. Why? Because those are not going to impose any material impact to the financial books. Those are not going to impact those are not going to impact my financial statements much, right? So accounting principle basically allows that we can be disregarding such particular transactions which are not going to affect the decision making of the users under the financial statements, right? And so as not to make the financial statements voluminous, very much voluminous, the materiality concept is there, right? Further, it's a conservatism. It's a conservatism. Conservatism says what? That whatsoever the anticipated expenses or losses are there, those are to be accounted for. So if you're going to have a anticipated loss, you're going to have an anticipated expense, those should be taken into account. But if you're going to have a anticipated gain or potential income, that should not be considered, right? In that case, that should not be considered. That is to be taken care of. Is that clear? Is this particular point clear over here? Right? Now, That was all about the basic principles about the GAAP. I hope that you must have understood all these particular points. Are you clear with such points? Kindly please confirm yes or no. These principles are very much important. Every single principle over here is very much important. Now, let's learn further about setting up the GAAP. Setting up of the GAAP. Actually, the main SEC was created first of all, right? SEC is what? SEC is the Securities and Exchange Commission. SEC is the Securities and Exchange Commission, and it was created because of the Great Depression, right? And SEC has actually encouraged the establishment of the some bodies like AICPA. AICPA. Now AICPA is what? AICPA is the American Institute of Certified Public Accountants, right? And also SEC was responsible for setting up of the FASB, that is Financial Accounting and Standards Board. Financial Accounting and Standard Board was also set up by the SEC, right? And SEC actually works closely with the private organizations which set up the GAAP, but SEC does not individually or independently does not set up the GAAP. So SEC is working closely with the private institutions which do set up the GAAP, but SEC itself is not setting up the GAAP. That is to be taken in record. Is that clear? Is this point clear to you? And what is AICPA? AICPA is the American Institute of Certified Public Accountants, right? And AICPA actually appointed the Committee on Accounting Procedures. So CAP was basically set up by the AICPA, that is Committee on Accounting Procedures, right? And when the FASB was created, when basically SEC said that the FASB is to be created, that is Financial Accounting Standard Board is to be created, the AICPA established the Accounting Standard Executive Committee. So when the SEC said that the FASB is to be created, after that particular point, the AICPA that basically established the ACSEC. Now ACSEC is what? Accounting Standards Executive Committee, right? And this ACSEC that basically publishes audit and accounting guidelines. So whatsoever the audit and accounting guidelines are there, whatsoever the statement of positions are there, right? Those are being published by the ACSEC. Is that clear? Is this particular point clear to you? Right? Just let me just navigate to that particular point. So it says that when ACSEC was established, ACSEC was established. Now further point is related to that these guidelines are published by ACSEC. Now audit and accounting principles summarizes the accounting practices for the specific industries related to the colleges, airlines, casinos, etc. Right? And that will be all about this video. Thank you so much and see you again in the next video. If you want to get the complete course of JAIIB, the course is available in English only language also, and also the bilingual course is available. Simply just do WhatsApp JAIIB to the number 83609 44207, and I'll be sharing all the details with you. So thank you so much and see you again.